Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 1st, 2017. Now to get started this week we're going to begin where we always do with that all-important US dollar index. Again, in our Forex trading, the bulk of the trading is in Forex is buying or selling US dollars. So when we look at the dollar index, we can see that we've had another leg down here. We've got a new trend line that's formed here at or about the 98.50 area. Our indicators are still largely warning that the dollar push to the downside is starting to bottom out here. Now, we look at our neural index still pointing down, but our predicted medium and long-term differences are flattening out and starting to rise higher. Our predicted RSI is again starting to bottom out down here around the 30 level, just above about 25 to be specific, suggesting we could be moving higher. Now that critical VantagePoint 18-day predicted moving average coming in at 99.16. So again, we're going to watch this 98.50 level very closely to see if that will trigger shorts on Euro US and a number of other pairs. So when we look at the euro here, once again, we've had a big gap up in the market from last week after the French elections, but the euro really, guys, has done absolutely nothing since. We're all congested around this 109.50. This could be the new top here. That will be left to be seen. Now remember, we do have a UK bank holiday on Monday, so be careful on Monday. Watch more Tuesday, Wednesday price action. So when we look at these indicators from VantagePoint, they are definitely in overbought territory. Our predicted RSI, predicted MACD, our long-term predicted difference. So all of this is warning that we could be getting ready to move back towards the 107.55 area, which is the VantagePoint critical 18-day predicted moving average, which in this case is acting as a pivot area. While above it we're long, while below it we're short, but we're watching very closely to see if the dollar index can recover. Now the dollar's got a big week ahead of it. We've got the non-farm payroll and we've got the FOMC on Wednesday, so it's going to be a very, very choppy week for the US dollar and of course the euro. So for next week, watch the 109.50 area very closely to see if we can make a sustained break of this area. If we do, then the euro could have further room to extend, but I think that the upside will be very limited prior to the at least the FOMC and the ADP report on Wednesday. Now, again, US Swiss franc basically is a US dollar index trade here, guys. When we look at this, our critical level 99.73. We had a bit of a sell-off last week, but it wasn't huge. But we're still holding below 97.73. Our indicators here are basically moving sideways. So again, this is warning that we could be getting ready to turn higher here. Watch the 98.70 level very closely, this lower trend line. If this holds, we want to be buyers here pretty much immediately. Now, when we look at the Great Britain US, again, we've got a great big bar that's come up here from last week. And again, this bar was based on the surprise announcement that there's going to be an election in June in the UK. But our indicators here are not showing a lot of momentum. The indicator that has me very concerned is this one, the medium-term predicted difference crossing over the long-term predicted difference to the downside as the market moves higher. Now, we have pushed up slightly above the 129 area, but we've not a rock solid close here, 129.46. But the further we move away from the VantagePoint 18-day predicted moving average, the more likely the market is going to retrace to it. This, of course, has nothing to do with Fibonacci, Elliott wave, or any of this stuff. It's simply we run out of buyers here. So we want to watch this very closely, the 129 level. If this is a true break from this particular range after the election bar, then we could move above 130 very easily. But again, in Monday and Tuesday trade, we want to watch that 129 area very, very closely because, again, our indicators from VantagePoint, our predicted RSI is at 90.4. I don't recall the last time I've seen such an overbought signal. If we look at this going back over the last year, we have never been this high on the predicted RSI. So again, it doesn't mean that it can't go higher here, guys, but it is a huge warning sign that this pair could be getting ready for a substantial retracement. Now, as we come into the dollar yen, we've got a new trend line that's formed here at the 112 area. So what we want to do is be very cautious around the 112 area. If we can break above that area, then we should be able to potentially run back up to the more recent swing highs up in this 115, 115.50 area. But we must make a clean break of 112. In order for that to happen, we need those equity markets moving higher here, guys. That's what we really need, the intermarket correlation. And we need gold to continue to move lower. Now, our indicators from VantagePoint are not overbought yet, but they are moving in that direction. So we want to be a little bit cautious here. Our predicted MACD is still below the zero line. So my hope is that we can break through this area, but dollar yen is notoriously volatile in the week of the non-farm payroll and, of course, that FOMC announcement. So we do have a fresh triple EMA cross from VantagePoint, about 4 days old. The key pivot area 110.34, long while above this area, but be very cautious again around this 112 area. Now, as we come into our three main commodity pairs, US CAD, Aussie, New Zealand, Aussie, US, New Zealand, US, basically the same trade here, guys, very similar, but they are absolutely getting killed from the Trump rhetoric here. Trump is now putting tariffs on Canadian lumber. He's talking about one day he's in NAFTA, the next day he's not in NAFTA, then he's back in again, he's negotiating. Can't keep track of it all here, guys. But what I can say is these comments are causing a lot of havoc on Aussie US and particularly US CAD. So when we look at this, we potentially could be getting ready to extend higher yet again. If we back this out over the last 9 months, you can see that we don't have a lot of activity up here. There isn't a lot of resistance up at this particular area after breaking through this 135 area. But once again, when we look at the main indicators from VantagePoint, they are moving into heavily overbought territory. And the only reason US CAD is this high is because of the comments from Trump. So when we look at our medium-term predicted difference crossing over our long-term predicted difference to the downside as this pair continues to move higher, this is showing the power of the VantagePoint software. I believe that this is correct, that US CAD is getting ready for a move lower. Now, the Canadians are notoriously nice people. I too, of course, am Canadian, but I can warn you, our patience is running very thin with Mr. Trump. And they're already talking about retaliating, not accepting any of the coal from the U.S., all these different things. So the last thing anybody needs here is a trade war. So I think that Mr. Trump will settle down a bit here, and I think the Canadians will step aside. But right now, they feel like they're being bullied a little bit here. And clearly, this is having a very negative effect on the Canadian currency. So our critical VantagePoint 18-day predicted moving average is all the way down at 134.83. What I can tell you here, guys, the further we move away from this number, the more likely it is we are going to retrace right back to it. So watch this area very closely. And again, the medium and longer term indicators from VantagePoint are warning that this thing is getting ready to pull back. Now, the Aussie-US is basically a US-Canada trade. US-Canada goes up, Aussie-US goes down. So once again, Aussie is under pressure from these Trump comments, but once again, we're holding above this 74.50 area. We've paused here, so we'll see if we can put in a new low for the week, but then it's likely to retrace. Now, the 75.26 area, I believe, could come under pressure this week, but if we get a hawkish Fed and a strong non-farm payroll number, which I believe we will, that could put additional downward pressure on this particular pair, which of course would then spill off into New Zealand. New Zealand, you can see this trend line we talked about in last week's Outlook, already under pressure. It's broken here. The key VantagePoint level 69.54, but again, we're at 16.5 on the predicted RSI here. So that is warning that basically our downside potentially could be very, very limited. So once again, we've got a choppy week ahead of us, but as long as we know our critical levels, then we can definitely trade it and make some money in the markets.